Okay, I think as everybody has already joined, we can make a start. Hello again, and welcome to today's webinar. Our topic is compliance updates in Saudi Arabia and beyond. So really an outlook towards what's happening in the GCC. And if I can go to my next slide here, there we go. I'm delighted to be joined today by Mr. Thomas Van Hey, partner at Orifer Tax. Thomas, welcome.
Thank you very much. Thanks for having me.
It is our pleasure, Tomas. And myself, Alex Pavel, I'm the Managing Director at Paguero for the Middle East region, as well as Africa and Asia. And we've got a really different way of approaching the topic today, right? I hope you'll enjoy it as much as Tomas and I have in the preparation for this. But we've got a few key topics, right? Like the developments around the GCC, the e-invoicing lessons learned, and the top 5 mistakes that we've seen with the adoption of e-invoicing in Saudi Arabia, as well as a really new topic around the gamification of tax compliance, that is, and how some ideas from around the world may or may not be something that we'll see coming to the region as well. But the main difference from other webinars we've done is this is more of a conversational type of webinar, right? So it's going to be more discussion-led rather than simply following the PowerPoint slides. We do have those, by the way, as well. So rest assured, there is a background to our discussion, but hopefully you'll enjoy the new format. So with that, let us dive straight in. And here, I know, Tomas, you've been following very closely all of these developments and working with your clients across the GCC, across all of these different aspects relating to either VAT or corporate tax, e-invoicing as well. So there's a lot on there on that short list. But what would you say is keeping you most busy these days when it comes to developments around compliance and tax?
Thanks for the intro, Alex. It's hard to say what keeps us busy specifically the most. You and I work in the GCC region, and I'm assuming most of, if not all of the attendees as well. I think it's fair to say that it's a region where the progress is quite fast, not just economically and socially, but also in respect to the legislative frameworks. If you speak about the UAE, for example, we just had a new labor law and a change in the working week as well, really very quickly, one after another. And the same thing holds true for tax as well. And I think there's on the one hand the developments in terms of compliance and compliance enhancement that we're going to talk about a bit as well today. And there's on the other hand, I think the developments on an international tax level, which are these days Pillar 1 and Pillar 2. The OECD is already looking at what goes beyond Pillar 1 and Pillar 2, and is going to be looking at estate planning and matters which are potentially going wrong there. But from for most governments right now, it is, what shall we do with Pillar 1 and Pillar 2? And you've alluded to it, that obviously that last week on the 31st of January, the UAE announced in a press release that it will be introducing corporate income tax with effect from the 1st of June 2023. And I think that was probably one of the more eye-catching and more fundamental changes really to the frameworks in the region. But despite the fact,
just a question on that, Tomas. I think it's, yeah, you're absolutely right. I think you're touching on this topic on recent events you've either organized or attended. So it's a really hot topic these days, and it comes off the back of everything that's been happening in the last, shall we say, 8 months or so, right? If you roll back the time a bit, right? We had a single VAT rate across the GCC back then, right? And then we saw the differentiated VAT rate in Saudi. We saw the new plans for the VAT rate change in Bahrain as well, and now corporate income tax in the UAE. The pace at which this is all happening is quite extraordinary, wouldn't you say?
And I would definitely agree, and it's not easy to keep up for tax advisors, let alone for businesses that have something else as their focus, as their central focus. Central focus of a normal business is operations, and they try to do that as good as they can. Some of these changes are then come in the middle of it, and then come disturbing maybe certain plans. I think you've alluded to a few there already in regards to VAT as well. Obviously, another major impact will be when it comes the introduction of VAT in Qatar and Kuwait. And we need to close the circle. It was the intention that the 6 GCC countries in the span of 2 years, all of them would introduce VAT. And that was in the span of 2 years as from 2017. That didn't happen. I think we still will see it happening, but it's still a bit further away. Now, I think in the region, the 2 countries that have been working the most on their tax policy are the UAE and Saudi. UAE as a result of Pillar 1, Pillar 2, and implementing corporate income tax, but it will go further than that as well. And Saudi, let's say in a type of healthy competition between the 2 countries, has been looking at implementing free zones in the same way as the UAE has them. Is looking at reforming its tax laws as well. There's been a lot of attention to KSA taxation, especially for foreign direct investment and e-commerce. There's been in the press, I'm not saying anything secret here, that Fetcher, but also Careem and Uber, they've been hit with large assessments. And
yes, they have.
Those are the public ones, and we know of a lot of private ones as well that are not known to the public, with amounts equal to that, if not higher. So it makes a very, very dynamic landscape, which we cannot forget. CFOs, they don't like too much of this dynamic. They like stable things which match their forecasts for the next 3 years and so.
Absolutely, and it makes a strong case for compliance as well. Right? We've seen with some of the examples you've shared what happens when some of the taxpayers maybe don't have the right controls in place, right? And all these regime changes from a tax perspective, right? They have repercussions if you look at it across people, process, and technology, right? Any such change, the impact on the way the processes run from a finance and IT perspective, the way the systems are set up, it takes quite a bit of forward thinking, right, to be able to adapt to this. And it's not often we see in any jurisdiction changes coming at such a pace, right, or in a region, should I say, looking across the GCC.
No, for sure. And I think obviously the GCC has had taxation prior to the introduction of excise tax and VAT. But let's say that it was relatively sleepy in the way that it was approaching things. It was much less dynamic. That has completely changed. So I think to a certain extent, the companies are still getting to grips to that, and getting to grips to understand what the stance is of the tax authority on a number of items. One example of that is if you look at the very large amount of guidance which has been issued now by tax authorities across the region. That was something that we did not have prior to 2017 when excise tax was introduced for the first time in Saudi in mid 2017. We have a lot of these guides now, and it means that essentially our tax profession becomes more complicated, because before didn't have to do a lot of research, had to look at the law, the executive regulations, know the practice as well, and very important. Now we have much more documented formal positions and practice, which is very helpful. I think the tax authorities need to continue to do that. It makes our work a bit more lengthy, but we are going a bit away from the, let's say, the informal every year, the countries that had corporate income tax filing of our tax return after we finalize the financial statements. It really takes a whole new dimension, and I think you guys at Paguero, you're in the driver's seat watching all of this evolution as well, going from maybe systems which were not always up to date. Even if you say, okay, 4th of December 2021, that's almost 4 years after the introduction of VAT. There is still
Yeah.
a long way to go. Yeah.
Absolutely. No, we've seen this very clearly with the introduction of e-invoicing, Tomas, and it's happening at the same time with some of the points you raised for the developments we're seeing on the short list, right? At the same time, we're seeing this convergence, right, in terms of the way ZATCA is looking at things, right? ZATCA being now the result of the merger between Gazet and the Customs Authority, right? So we're seeing probably the leading example, right, in the region of converging the different tax types and taxation regimes, and having an oversight across the entire economy, which is a really interesting and forward-looking approach, I believe.
You're hitting the nail on the head in terms of the information available to the tax authority. Saudi was already good at cross-checking information between customs, labor, GOSI, and the tax authority. As from 2023, even though it's going to go in waves, but the actual exchange of the invoicing info with ZATCA will become an incredibly powerful tool. You can think of pre-filled out VAT returns. You can
I was
think
going
of
to ask you
pre-filled.
about that, right? It's that last point you included on the slide, and I think many of our guests here today on the webinar were also thinking about this, right? Is there a view towards a more real-time reporting of indirect tax, do you think, on the horizon in the region?
I think there is. It's inevitable. The interesting thing is when VAT kicked off in the region, and I was a part of the implementation project, we were using old world recipes that were tested and tried and generated revenue for the tax authority, but it was not the creative, forward-looking that you might find in other places. But I do believe that will come, and especially when looking at e-invoicing, which mandatory in Saudi, which will come inevitably to the other GCC states as well. If you look at that, the amount of data available to the tax authority, not just to pre-fill out VAT returns, but simply to say, you know what, we don't need a VAT return anymore. And that should actually be the ultimate goal, because there's a lot of resources going into the filing on a quarterly, monthly basis. You don't need that if you've got real-time reporting. And I think that's the ultimate goal that we need to go to, and that we will go to as well in a few years.
Well, that's certainly an interesting development, and seeing the pace of change here, it's entirely possible that further developments such as this could arise, right? It's certainly within the realm of possibility. So let's zoom in a bit more into e-invoicing, right? This is one of the big topics of recent days here in the region, and we've been looking at this in a lot of detail, obviously, at Paguero, since we're specialized in the area of automating things like electronic invoices, purchase orders, sales orders, and the like. And having seen different approaches in the market and during phase one in Saudi, I think there's some really interesting aspects to talk about. And I know you, Tomas, have been closely advising clients as to how e-invoicing is impacting them, and especially how it touches on other relevant aspects in their business, like their VAT compliance, for example. With that, I think, from my side, I wanted to touch on one of the areas that I see probably as a very common thread if I look back at last year, and that is one of the mistakes that some of the taxpayers have been making is putting the e-invoicing responsibility in the hands of a single department, right? So treating it as an IT problem or a finance problem or a tax problem, and kind of leaving it to that department to deal with in isolation, right? And the way I think one should look at it, right? The way I've seen the most successful taxpayers look at it is really look at it horizontally across the business, right? So going and tying together all the different functions, but the process happens horizontally across finance and IT and tax, and everybody has an input and a responsibility throughout. But until that holistic view is taken, it's really hard to come up with the right way of addressing the changes that are required within the business to adapt to electronic invoicing. So, again, going to that people, process, and technology approach, right? That also hints at the holistic approach that can really help companies get to grips with this sooner, and most importantly, in a scalable way, looking at what's down the pipe in phase 2. And I wanted to pass to you on that side as well to see what have you been seeing with your clients in this respect.
Well, I think that a very similar thing happened in 2017 when we were telling businesses you need to get ready for VAT. Of course, there's no one size fits all for a lot of organizations, and you always need to think, what makes sense for this or that organization. But I think the risk is indeed to see this implementation as too narrow, limited to indeed only IT. It sounds like a cliche, and a lot of advisors, keep on saying yes, we need to involve multiple departments, but there is some truth in cliches sometimes, and so I think in this one as well, I think it is important, that you involve multiple departments.
Yeah, absolutely. I think with the effect of electronic invoicing mandate in phase 2, right, it becomes even more acute, because with clearance in place, there's a real need to get it right. Right? There's very little room to maneuver in terms of fixing any issues on the fly. It's a lot harder to do unless you've got your system set up right, and that's going to be a big point of focus. And certainly in our conversations with taxpayers, that's really top priority, right? Making sure that once the new clearance model is up and running, they don't end up having their sales delayed by rejected invoices during the clearance process. And as we've seen in the early days, shall we call them, in phase 1, there are different levels of readiness, right? So some of the other issues I've come across include what is an electronic invoice, right? The actual understanding of what constitutes an electronic invoice versus what's maybe just an electronic file, right? So I've seen situations in the market where a PDF that's actually a picture copy of an invoice is considered to be an electronic invoice by taxpayers, and of course it is not, right? It has to be a structured digital file that is actually holding the elements required by the SATCA mandate. So it's fine differences, I think, in some respects, right, in terms of the understanding, but they have a crucial impact in what's actually compliant or not. And I know you're speaking to clients often these days about the impacts of not having the correct setup and not having a compliant invoice when it comes to other important aspects like VAT recovery, right, or making sure that there's no loss of reclaimable VAT during the VAT returns process.
Yeah, no, it's a really good point. Where I think one of the benefits of moving to e-invoicing is, provided that the software that you're using is compliant, we as tax advisors or as people who look after the compliance of businesses, we should not be checking anymore whether each and every single invoice is compliant for VAT purposes. You should, as the supplier yourself, you should verify that your system can produce these in a compliant way. And obviously, if you receive them, you should check them. But at the outset, the software that is being used should be compliant. And so either we're going to have all invoices wrong, or all of them correct if the software is properly implemented. So I think that's a different way of looking at things, and it is indeed important. If you don't get it right, the input VAT recovery is lost, and I think that's what we're going to be seeing in the next few months as well is a bit more focus on this to all get to the same level.
Absolutely.
And I do think that the the impact is bigger currently in a B2C environment.
Right.
That there really the impact has been felt much more, and I think has been taken more serious. In a B2B environment, it's less so, in part understandably. But I think now is really the time to get it right, in anticipation of the introduction of the real-time exchange of these invoices with Zatka. So I think now is really the time to look into that. Yeah.
No, absolutely, Tomas, and we've seen this firsthand, right? The way we're helping taxpayers, our platform has built-in compliance validation and all these checks, right, for a compliant e-invoice happen by themselves pretty much. But not all systems are built for that, right? Not all systems have been built to this purpose. So we've seen real issues in even the prerequisites, right, to a successful tax and e-invoicing project, right? Especially in the beginnings of phase one, with taxpayers sometimes missing key data within their source systems, right, when it comes to compliant tax invoices. And I think the big change in terms of mindset will come once e-invoicing is fully up and running with phase two, in the sense that all of these invoices will be directly visible to the tax authorities, right? The VAT regulations, which govern what should or shouldn't be on an invoice, have been in place for a while, but with the electronic invoicing, there's suddenly a direct large looking glass over all of the invoices within each and every taxpayer in Saudi, and that I think will drive the adoption of compliance systems as we see the regulations evolve. And I think that's what you're seeing as well with what you're seeing with the difference between B2C and B2B. It's perhaps that in B2B, the real focus starts from an audit perspective anyway, as we're nearing phase two.
Yeah. No, it's all. I guess it's all about compliance, and the underlying motive is an incentive, obviously, for the authorities is to get to a higher level of compliance. What would be interesting, I think, at some point, something which the four GCC authorities that have introduced VAT so far have not done, is for them to try and measure their VAT gap, like the EU countries.
Indeed, yeah.
Because I think that I know that they have a high level understanding of it, mostly because they would know what the size is of their economy and how open their economy is in terms of exports, imports, and so on. So they should have a high level understanding of what the number of collected VAT should be. But you could make that much more granular by indeed trying to measure that the VAT gap, and it's a tried and tested tool in the EU, which also has its disadvantages, but I think it's a good policy tool to kind of to say, this is where we need to work towards. I'm not saying that it avoids missing trader fraud, these kind of things, which do happen also in the GCC, but it is a good tool to try and say, we're currently at level X, we need to get to level Y, and I think that's also something that we will get to at some point as well.
I wouldn't be surprised at all. I think, and the method you mentioned is certainly one of the ways to tackle this. And again, it goes back to the discussion we were having just now on the convergence of different tax obligations under Zatka's remit, right? If we think between the customs information, the information that's going to come through invoicing, the VAT return, the corporate income tax information, as well as the transfer pricing documentation and reporting obligations, suddenly there's quite a wide net of compliance cast upon the entire economy, right? So again, this is looking to the future, but one can certainly see how it's going to become harder and harder to not be compliant.
Yeah, No, for sure, for sure. And I guess it's a great segue to look at alternative ways of becoming more compliant. So for those of you I encourage everyone to follow us on social media as well, my personal account and our office's account, because we publish news every day tax updates on the GCC, and I know that Alex is also quite active. I thought it would be interesting to introduce a concept which is currently a bit missing in the overall debate in the region, and that concept is the gamification of tax. I'm not talking about gaming the system, because that would essentially be fraud, but it is essentially looking at game techniques and game elements which are introduced to a non-game environment. So obviously a non-game environment is filing of tax returns. People do not see this as a game. They do not get joy out of it. There's no benefit to it. But gamification, not just for tax purposes, tries and does exactly that. Introduce, for example, a competitive element, a reward element, something that really encourages people to say, you know, we will make sure that it is there on time. In the same way that maybe you are, people make a sport out of it. Just using Emirates Airlines as an example, to make sure that they reach silver or gold or platinum status, and that they keep that. You know, for people it's a game really underlying. And go ahead, Alex. I think you
Yeah,
wanted to
no, I
say.
was just gonna say it's probably the first time. It's a record for you, Tomas, but it's the first time I've seen Space Invaders and tax in the same context, right? And on the same page for sure. And it's a really interesting way of looking at it. I know you've got quite a bit to say on this, and to me this is a new topic, right? I've always been in the category you just mentioned, right? Thinking at tax more from the obligations, compliance, systems, processes, the business side of it, not so much the lighter side of it that could well be part of the future as well.
Yeah, exactly. Yeah. And let's just run through a few examples of those, and then perhaps we can also see whether those work for the GCC somehow, or if there's certain elements in there which help. So one example which is very often cited is the Taiwanese receipt lottery. The concept is relatively simple. It is I go and buy something for which I'm supposed to get a receipt, but I actually don't have any incentive whatsoever to ask for that receipt. As a result of which, there may be sellers who say, you know what, I'm going to ignore this sale or cancel this sale. Whereas if you do ask for the receipt, and obviously there need to be certain measures in place as well to make sure that the seller still doesn't cancel the sales, but you have a real incentive in an environment where maybe before you wouldn't really care that much about the receipt, to actually care about the receipt, because it will have a code which allows you to enter a periodical draw and allows you to win a relatively large sum of money. And the interesting thing is that this was tried quite a long time ago. It was tried in Taiwan in the 50s already.
Oh wow.
And yeah, so it's pretty old, you know. It's pre good computers, I would say. Yeah? What you would have is you know, you can find them sometimes back still in some countries, these little pre-printed books with numbers on them, and those would constitute the receipts. And if you finish your book, you're supposed to have made a number of sales. So the same concept applies here, and what you saw is, as a result of people asking for these receipts and wanting to enter into the draw and win a sum of money, the tax revenue jumped 75% in 1 year, which is a very,
Wow.
very high jump, you know. And I think,
Yeah, it's huge.
yeah, you know, it makes up for more than what you're paying out to the people entering the draw, for sure. So Taiwan did this. There's an example also which is a bit more recent, which is Samoa. Similar concept, but with a bit more modern means. You'd have an app and that app allows you to scan the receipts, and every receipt that you scan allows you to enter a draw. This time not for money, but for prizes, and you can immediately see what prizes you're competing for, you know, when the next draw is, and it makes asking for a receipt, and it makes the compliance a game, and that's essentially what gamification also means. You know, the way that Samoa was also selling it is they were allowing the people awarding the prizes also to be publicizing their products and whatnot. So they
Oh,
really
wow,
said,
that's innovative.
yeah. So they said there's no one who would stand to lose in the whole discussion, you know, because what, as a seller, what can you protest against? You know, you're supposed to be reporting the tax on your sales. If you're protesting against this, then what are you protesting against, really? You know.
Yes, very fair point. And I
Yeah.
think China's on the agenda as well here.
Yeah, so China has famously social credit scores. If you cross the street when it's a red light, you get a negative score. If you're a good citizen, you get a positive score. And those scores, they are, the effect of it is relatively far-reaching, because it even extends to, for example, your credit worthiness with banks and whatnot. If you're a good
Oh, wow.
citizen, you get lower and more benefits, yeah. And if you're a bad citizen, it's not the case. And it extends also to taxes. So invoices, the so-called golden invoice system in China, invoices being exchanged with the authorities. If you consider a taxpayer with a low credit score, you're going to be getting more audits and easier fines. Whereas if you've got a high score, then everything passes much easier. So I think those are things, you know, some people might say it's you know, it's far away and whatnot, but I think, you know, why not consider some of these measures? And if you think of it, in a more conceptual way in regards to rewarding good behavior, then there are tax authorities out there who have actually done that already. And I put a few examples on the next slide as well. For example, for customs purposes, companies that have certain processes in place which have been vetted by the customs authority, they are awarded the green lane, is a concept used for that, which means faster processing for imports and exports. So you're rewarding good behavior. And it was interesting because when you look at tax authorities around the world, a lot of tax authorities have started to look at behavior of taxpayers. I put some information on the slide as well. There's 10 tax authorities around the world that actually employ behavioral researchers. And
Wow.
one example, yeah, it's and it helps. You know, it is entering the human psyche around compliance. And for example, one thing that the Dutch, but also the Belgian tax authorities did at some point is, you know, the letter that you would get from the tax authority reminding you to pay. They gave that to some of these behavioral researchers, and they said, how can we increase compliance with this? You know, giving the same message. And the letter initially said, you know, dear taxpayers, with reference to Article so and so of this law, we hereby, you know, claim X amount of money and whatnot. And I said, no, we actually just need to change the way in which we write. First off, let's address people with their names, because it makes them more accountable to what you're doing. And the second thing is, a taxpayer doesn't care about which article of the law constitutes the basis for the claim. Only tax advisors and tax lawyers care for that. So let's just say you still owe a sum of this much, plus interest plus penalties. here's the bank account, please settle. And because of the change in messaging, the behavior of the tax payers also changed and resulted in higher compliance as well. So yeah, so maybe the reminders of ZAT and the FTA and the other tax authorities in the region, they might they might rethink them as well a bit.
Yeah, it's a very, very interesting viewpoint. I can't say I've focused on that in the past, but I find it fascinating, right? The behavior element and focusing on it to that extent. It's quite remarkable. I know, Tomas, you're also looking at what potentially could work here in the region in terms of such behavioral incentives, shall we call them, from the tax authorities. What did you see as potential ideas that could potentially click here in the region?
Yeah, I mean, we've listed a few on the slide. I think if we let's say, keeping a very open mind to this, what would realistically work? I think what would work, for example, is a type of a vetting and scoring of taxpayers. You have taxpayers that might be large but very well organized. And very well organized, that means, for example, they have a very experienced tax person that has a say internally over things. They've got processes in place, they've got a good ERP or e-invoicing software in place. All of those should be elements which contribute to getting a positive score. And then if you don't miss any returns, and if you didn't get any penalties for the last 1, 2, 3, 4 years, you should be awarded gold status as a taxpayer, and the tax authority should be going less after such an entity. It's the same thing as with credit scores. If you maybe just starting off and just starting to work, which is the equivalent of a company just starting, then the person evaluating you needs to look a bit closer, because you're inexperienced in paying off your debt if you're just starting to work and you're trying to establish a credit score, or as a company if you're just starting to file your VAT returns. So I think that's one thing. You could even make that public. You could have a type of I think you referred, Alex, to the ESG scores. You could integrate this into the thinking as well of the tax authority. Have a competition for the best taxpayer as well. And if you want to go into the extreme, you could reward businesses with air miles for the finance directors, or for the tax person, hotel points. All of those are simply rewards for doing it right.
It's interesting to see, right? We see these sort of incentives in the B2C world already, right? With different companies employing them to encourage loyalty and such. So it's interesting to see the crossover, right, of what could happen with the same concepts but applied from a tax compliance perspective. But you certainly, I mean, if you showed me this first, I would have probably said, I don't know. But then you've shown us all the other examples of things that have been already done, tried, tested, and done so successfully in other countries. So why not?
Yeah, indeed. Why not? And you could even go one step further. And the idea behind the increasing of a compliance level also is the flip side of that is to reduce fraud. And frauds can manifest itself in multiple ways, and one way is missing traders fraud. Now there is a concept which exists, which is sometimes referred to as the tokenization of VAT. And what it essentially comes down to is, instead of charging real money, I charge a token, let's say monopoly money. And I'm receiving tokens from my customers, and I'm getting tokens from my vendors. And I deduct the tokens that I get from my vendor from the tokens that I get from my client. Tokens don't
Very,
represent. Sorry?
very interesting. So you can only use those tokens, I'm assuming, with only certain tax authorities or similar, right? It's not something you can redeem anywhere else.
Exactly. You can't buy a coffee with it. The only thing that it represents is either tokens that you owe to the tax authority or tokens that the tax authority owes to you.
Right.
And every token represents money, but it is something which does not have any value other than in the relationship with the tax authority. So this is something that hopefully will get tested as well at some point. You know, I'm not advocating that we use crypto for VAT purposes, because maybe it's a bit too volatile for this purpose and not foreseeable enough. But I guess the underlying idea of increasing compliance touches upon a variety of matters, and in the end, what we're trying to increase is on the one hand transparency towards the tax authority, and the other hand the trust as well between the tax authority and the taxpayer. And that's exactly what's happening for customs purposes with those green lanes. And
Right.
you could think about, you know, if you are scoring taxpayers for VAT or for corporate income tax purposes, what benefits can I give as a tax authority to those taxpayers for rewarding that good behavior? And, you know, miles is an interesting concept and so on, but effectively what the authorities should be doing, and what they do in a number of countries, is, for example, compliant businesses with a good compliance score, to get their VAT refunds faster, which
Oh
is a
wow,
very
that's a big cash flow impact, right? It's
exactly,
certainly
yeah,
certainly irrelevant in that sense.
yeah. You have others that grant payment facilities, waiver of interest. All of those things are things that are happening already right now. You've got, to a certain extent, it's not the exact same thing, but you have it to a certain extent in Saudi. You don't get your certificate unless you're compliant, but that's more of a
Yes.
negative, you know, incentive than a positive reward for being compliant.
Indeed, indeed, and we're coming close to the scheduled time here, and you know, to those of you who are joining us today, you're more than welcome to stay on, and we'll use the following few minutes to wrap up today's discussion and tell you a bit about Orifer Tax, tell you a bit about Pagero, and if we still have time, maybe take a question or two. It's certainly been very, very interesting to hear all these topics. And you know, the tokenization of VAT is a really interesting topic, Tomas. I imagine some funny conversations should it be a physical token, right? Imagine losing your token that was a VAT reclaim token. You'd feel pretty angry about that, and I'm pretty sure the tax authorities wouldn't believe you if you said you lost your token if it was in a payment position as well, right? So it probably has to be some e-token equivalent to not be misplaced, shall we say? But very, very interesting way of looking at it for sure. So with that, Tomas, do you want to tell us a bit about Orifer and what you've been doing here in the Middle East?
Sure, yeah. I won't bore you too much, but just in a snapshot, we were founded in 2017 by myself, offices in Dubai and Riyadh. We're a niche player with a good position in the market, serving multinational corporations that are operating in the GCC. You know, we're trying to help people and serve people as best as we can for advisory and compliance. That's in a nutshell really what we do.
Absolutely. I think, like you said earlier, Tomas, it's a really good opportunity for folks on today's webinar to also follow you on LinkedIn, and also check out your YouTube channel as well. You have a lot of interesting insights popping up all the time around all of the developments around tax and compliance. And I've certainly learned a lot, not just through following you on social media, but also on today's session with all the interesting topics around gamification as well as the regulatory updates. So look, thank you so much. It's really good to have you on today's webinar. and I hope we'll be able to re-engage on similar topics in the future. Like I said, we'll look at the questions in a minute. I'm just going to briefly mention about Paguero as well. You'll notice that we've done this the other way around, right? Normally we start with company intros and then the actual content. As I promised you, it's a new format, so hopefully this has been exciting and interesting for those of you joining us today. Paguero is a worldwide leader in automating the exchange of business documents, right? So e-documents such as electronic invoices, electronic sales orders and purchase orders, payment responses, clearance responses from tax authority platforms and the like. And we're a ZATCA qualified service provider in Saudi Arabia, and we're also qualified in other 70 such markets that regulate electronic invoicing in some shape or form. So really a global company and very much focused here in the region on all of the developments which are coming into play with electronic invoicing. We do many different things. This is just a snapshot, right? So automating the processes across accounts payable, accounts receivable, and really end-to-end from procure to pay and order to cash, right? If you think about all the different documents that come into platform, Pagero Online is designed to automate these business flows between buyers, sellers, so taxpayers essentially, as well as the tax authorities that are involved in those respective jurisdictions, all through a single platform, through a single connection, right? With full support for managing the compliance regulations as well as the relationship with suppliers. Lots to cover there. We won't go into it today, but you're more than welcome to get in touch with us for more details on this. This is a snapshot, right? The concept view of Pagero connecting the suppliers, the buyers, all through a single network and making sure that all the clearance requirements of these different document flows are handled as well. So quite a lot to cover there, a lot of good discussion. Thank you again, Tomas. Do we have any questions that we might want to tackle straight away? Oh, I've got a question. Okay. I see one here. I've picked one up. The question around B2C invoicing in Saudi phase 2, right? So there's a question there on whether it's going to be a real-time clearance process or a reporting type of situation here. So I can tackle the first part of that, and you're more than welcome, of course, Tomas, to jump straight in. So there's a different framework for B2B and B2C invoices respectively in phase 2, right? So for B2C, the compliance requirements have manifested themselves in phase 1 already, right? With the introduction of QR codes that are specifically designed for compliance, right? It's not just any QR code, it's a QR code that's also encoded with certain data elements that have to be part of that encoding. In phase 2, those B2C invoices won't go to clearance to the infrastructure, but they will instead be reported to the clearance infrastructure after the sale has been concluded. And the frequency of that reporting cycle will be defined in the further guidance as we approach phase 2, right? Tomas, anything to add on that?
Maybe first that I can't see the questions, so I'm hoping that you'll pick up on them, Alex. But
no worries, I've got them.
Okay, cool. No, I think the impact on B2C was bigger, but I think it's an important element of getting it right, huh? Because why is there a more focus on the B2C element is because different from the B2B environment, there is no one to go and check if they have a compliant invoice because there's no input VAT recovery. This is exactly why that gamification concept would be helpful. Now, I think there may be certain cultural barriers with organizing a lottery for this purpose, but I think that the focus on that element is right, and we've seen it in a number of countries around the world as well. For example, for certain sectors which are highly sensitive to fraud, and one is typical one is the restaurant sector. What you see is that the tax authority imposes to use certain softwares, and that all businesses that use a certain software are registered with the tax authority as well, to stating that they are using that software. The benefit of, yeah, I don't know if you've come up, yeah, and the benefit of that is if the software developer is found to be facilitating what is sometimes referred to as a zapper, which is the cancellation of a sale inside the software, then both the software developers, but also all of the entities using the software will be held liable for that. So it's a good way to find everyone in the chain.
Absolutely, absolutely catches everybody in the entire scenario. No, thank you, Tomas. That's wonderful, and really appreciate your insights. And thank you for all the questions, some of which we haven't had time to tackle, unfortunately, on today's session, but we will follow up on them. Thank you very much for your attendance and for your engagement today. We do have to wrap up, but it's been a pleasure. Thank you again, Tomas, and hope to see you again shortly.
Thank you so much. Have a good day.